Hello, everyone. Thanks for joining us this afternoon. I'm Sean Oliver, Senior Sales Associate here at Lightspeed. Today, I would like to welcome Robert Green of GreenTraderTax.com, which is a leading tax compliance firm for traders and investors. Robert will be going over how traders should prepare their 2013 tax returns differently from investors, along with many other very important topics. Please keep in mind that this presentation is for informational purposes only. Nothing presented today should be construed as investment advice or recommendation to buy, sell, or hold any specific securities. Since we don't know everyone's investment objectives or risk tolerance, we are not endorsing any specific trading strategies. We also encourage you to ask questions as we go through the presentation, and you can do that by typing them into the webinar chat box as we go along. Robert and I will try to answer them as we go along, or we'll get to them at the end of the presentation. This presentation will be recorded and uploaded to our online webinar library. You'll be able to see this as well as most of our past webinars online at lightspeed.com/webinar. So if at any point during the presentation you miss something or want to go back in the future and reference it, you can always go to our website where it will be archived. If you have any specific questions about what you are seeing, please feel free to contact me directly at sales@lightspeed.com or by visiting our website, www.lightspeed.com. Now I'm going to hand it over to Robert.
Thank you, Sean. And I'll show my screen. Welcome, everyone. I'm Robert Green, and you should be able to see my screen, and hopefully my sound is good. Maybe in the chat screen, just give me a Y for the sound and the display. All right, so let me quickly first show you our website, and I'll get a little larger. About us, professionals, 30 years in business, by the way. We have a lot of CPAs and attorneys dedicated on trader tax. Here's my bio page as a managing member of the firm. So we're a publishing company with a lot of content, and a CPA, a tax and accounting firm for investors, traders, and investment management businesses. I write the Business of Trading column for Active Trader Magazine, a Forbes blogger, and I write the Tax Guide for Traders, the McGraw-Hill book, but it's replaced now by our annual Trader Tax Guides, which are for sale on our website. That is the gold standard for what you need for trader tax. And you'll see me in all the leading newspapers and media and online, and I'm the main speaker at the Traders Expo and Money Show online. So as Mike said, as Sean said, excuse me, here are the topics for today. And we're going to do a condensed version. We don't have a big turnout here. We're going to talk about how traders should prepare 2013 returns differently from investors. Basically, if you're a business trader qualifying for trader tax status, meeting our golden rules based on requirements in the trader tax court cases, if you qualify for 2013, you can claim that on your 2013 tax return and deduct home office expenses, education, all your various trading expenses, startup costs, Section 195, and more. If you don't qualify for trader tax status, you're stuck with those puny investment expenses. Business expenses are much better than investment expenses. You'll save at least $5,000, $10,000 or more a year. A lot of Lightspeed traders may be very active. You're a great firm for active securities traders. I know that. And a lot of you may qualify. You may be pad and day traders, day trading over the course of a week, and that may qualify. Now that gives you business expense treatment on Schedule C, as opposed to the puny investment expense treatment on Schedule A. So first, with investment expenses, you have to itemize your deductions. First, it's only in excess of 2% of adjusted gross income. So if you make $100,000 adjusted gross income, the first $2,000 is not deductible. Secondly, if you're in a higher income bracket and you're subject to AMT, alternative minimum tax, it's not deductible for that. It's a preference. Plus, if you're in the top bracket, top two brackets, you phase out your itemized deductions with a piece limitation. And the best deductions of all are not even allowed as investment expenses, and that's the home office and education. Investors can't take those. So that's really the big difference between investors and business traders, is where you put your expenses. Now, you know, your trading gains and losses, for the most part, are going to go in the same place, whether you're a business or investor. If you're trading securities, a lot of Lightspeed traders do, you're using that new controversial Form 8949 cost basis reporting, where you have all those wash sales you have to account for, and perhaps wash sale deferrals at year end. That's if you're using the cash method, and all investors must use the cash method. But business traders have another break. They're entitled to elect Section 475 mark-to-market accounting, which only dealers and business traders can use, not investors. You can file that election by this April 15th as an individual or existing partnership. And then you don't use that dreaded Form 8949 with the wash sales and cost basis. Instead, you're going to use Form 4797, Part 2, Ordinary Gain or Loss. You're exempt from those onerous wash sale rules. That can be a real problem. Like if you trigger a wash sale with an IRA, you'll permanently lose it. So if you're trading futures, it's Form 6781, and we don't recommend 475, and Forex is a different area. So here you have this individual return with your expenses in one area, Schedule C or Schedule A, business trader Schedule C, investor Schedule A. Then you got your capital gains and losses on either 8949 or 6781, and then they move over to Schedule D. Forex could be line 21. So the IRS is already getting confused. Your dividends and interest on Schedule B. All of that is a lot better when you have an entity, which we talk about down below here. You consolidate everything onto an entity return, and you unlock a health insurance deduction and a retirement plan contribution. A lot of you active Lightspeed traders qualify for trader tax status, and you should set up a simple entity like an LLC and have a partnership return or an S-corp return. The LLC can elect either one. Now, you got to know your different tax treatments. That's confusing. A lot of you are struggling with those 1099-Bs every year from the clearing firm. It's got cost basis reporting, wash sales. Some things are covered. Other things like options are not covered yet. It can get very confusing whether you trade Forex, securities, futures, and what type of option. Stock options are like stocks. Index options are like 1256 contracts. Now, you want to try to get lower rates, the 60/40 rates in Section 1256. Sean, you got to put the 6 on that. It must have dropped off when you set it up. So with Section 1256, you get those lower 60/40 rates. 60% is a long-term capital gain. That top rate is only 20%. Top short-term rate is 40%. You do the math, it's 12% less. Now, if you're trading securities, you don't get that. But if you're trading indexes, you do. So some things you'll trade may be Section 1256. Now, when you do 1256, you can do summary reporting. You just get a very simple one-page 1099, not one of those monster 1099s that you get for securities. And the broker says at the bottom, hey, you made $25,000 net. Doesn't matter that you traded $25 million worth of stuff or $1 million. What matters is the net, and it's marked to market in Section 1256, the futures. So in other words, every day it's marked to market, so it's realized and unrealized. That's why they can do the summary reporting. There is no wash sales. They don't have to worry about what was open and closed. They just know it's pure economic reporting. It's nice and easy. That's not what you do with securities. You need line-by-line reporting. You got to report every trade. You can't just attach a 1099. It would be an extremely rare case where you could do that. You got to report every wash sale. And remember, a lot of the things on the 1099, or many things you trade are not covered on the 1099, like options and debt instruments. And some of your older basis may not be there if you have old-term investments. Brokers don't account for war sales across all accounts. Let's talk about this next issue here. Specialized accounting issues for securities traders, including TradeLog software to generate 8949 with proper cost basis reporting and accounting for war sales across all accounts. So you got an account with one broker, and you got it with another broker, and you got a joint account, an individual, an IRA. You got a bunch of different accounts in your name and your spouse's name, all connected to your joint Social Security numbers, and you file jointly, married filing jointly. Well, the IRS requires you to calculate war sales looking at all those accounts together. So you might have an account of one broker and broker A and broker B. Well, broker A and B don't communicate on war sales, and they don't even communicate between your different accounts that you have with the broker. So they report war sales just based on one account, but you have to do it based on all your accounts. That's unfortunate. I know a lot of you would rather just skip those rules, but you could get into trouble for doing that. And also, you got to account with your IRA. If you trigger a wash sale and buy it back in your IRA, you permanently lose that benefit of that loss. Again, I don't know how often the IRS audits for that, and I don't know how many taxpayers do that, but those are the rules. There's some software out there that might help you, but it doesn't do wash sales between stocks and options. Brokers don't do wash sales between stocks and options. The rules for brokers are identical positions, the one symbol. Now, you all know that a stock and a stock option have a different symbol, and even the options have a different symbol at different expiration dates. So what I'm trying to say is that the brokers have one set of rules, you have another, and this year a lot of brokers are trying to whitewash it by telling you, oh, just download your information from the broker. Well, you're downloading apples and you need to do oranges. There's no shortcut. You need TradeLog. It works well with a clearing broker for Lightspeed. It's really the only solution. It's set you back $350 or less. That's the unlimited version. Why pay an accountant to struggle with it to get it wrong? Why struggle with it yourself? Just run TradeLog, get it right. No big deal. And then it will generate that very big Form 8949 with big attachments. The Form 8949 can be at one page. It just says see attached, and then you attach the TradeLog PDF files when you e-file. Now, I said before, an entity is a better idea for 014 because it's better for claiming trader tax status. It makes your trading business look profitable because they see everything, the IRS. They don't see that you might have a job or profile you. You look like a hedge fund. And it unlocks the health insurance premium deduction, which a lot of you may have now under the Affordable Care Act. And those could be expensive if you're not getting the subsidy and you want that tax deduction. That's a deduction from adjusted gross income. And you also want a retirement plan deduction like an individual 401k, where you can contribute $17,500, which is 100% deductible, plus $5,500 more if you're over age 50, plus a 20% profit sharing plan. And you can go all the way up to $55,500 or more. So it's important to get the 013 filing right and then do the 014 planning right. So those are the basic things. Let's work our way over to the website now. See, this is our website, Green Trader Tax. Green NFH is the CPA firm. A lot of webinar recordings. You may need our platinum package. Here's a photo from the Traders Expo. So you see this spotlight here, the Trader Tax Center? You could access that from the Lightspeed site and their tax center powered by Green Trader Tax. when you enter this Trader Tax Center, there's a lot of information in here, like Trader Tax Status. Remember, I told you that's how you get the business expenses. Well, go to that page. It says the first step to savings. It explains that whole business about the 2% and the AMT. Go back and read that. Explains how you can save with the expenses. You can make the 475 election. And most importantly, it says how you're going to qualify. If you're full-time, you generally might qualify if you're a full-time day trader, trading every day, all day. But if you're part-time, you might be able to qualify too. It's very important to get this straight. So much hangs on the balance. Really, the business expenses, the 475 election, which is the tax loss insurance, you know, deducting all your losses in full and getting a huge refund, no capital loss limitation, and having the entity for the retirement plan and health insurance, all that depends on the trader tax status. So make sure you qualify. Read these rules, the general rules, and then the golden rules. So let's look at a couple of those golden rules. We're looking for 1,000 total trades per year, 500 round trip equals 1,000 total annualized. Start mid-year, it's half. We're looking for executions on over 75 days. That's close to 4 days a week. Looking for holding periods under 30 days. We're looking for over 4 hours a day. No, not too many sporadic lapses. Serious business tools, material account size. If you're doing automated trading, that doesn't qualify. If you have an outside money manager, it doesn't qualify in your retirement funds. Get that right, you can claim it. You don't have to elect that. You can claim that for 2013, even open years. But you got to go to this next chapter too, mark-to-market accounting, section 475. This is to avoid that huge pitfall. The biggest problem for investors is when they get stuck with the trading loss they can't deduct and the wash sale deferrals. We have people call us pretty often now that they have to report $1 million capital gain even though they didn't make much money at all because they have a huge wash sale deferral. So they have to pay taxes on phantom income. If they don't make the 475 election for next year, by April 15th, they could get stuck with a capital loss the next year. So they have to pay taxes on phantom income, and then they can't use their real losses. That's why you need the 475 election. It fixes that. It turns those wash sale deferrals into ordinary business losses on January 1st. It's a very powerful election. This is where you want to take a look at our blog. Because we're always writing about the latest things, like this latest blog, protect yourself from market losses with the 475 election. We had a lot of people call us up the last month or two saying that they had some big losses in Q1. I know the market may hit a new high today, but some of those tech and bio tech stocks rolled over. And they were betting big and on options, and they lost a lot of money. Well, that reminds me of the old dot-com bust. When the markets turn around and you have a big loss, which can happen, you don't want to get stuck with a capital loss limitation. You want that ordinary business loss that you can carry back, offset income of any kind, and you want to get a huge refund immediately. Read this blog. And definitely think about making that election. And how to make the election is explained on the blog. We also have a blog from last year where, if you go back to the archive, scroll down to about tax filing time last year, we told you about this one, extensions in 475 elections. We give you some extension strategies and more about making the election. That's what you really want to focus in on April 15th. Don't knock yourself out trying to file a full return. You might really struggle with the 1099, and you might get a corrected one in May. So get your extension in, pay what you owe, so it's a valid extension, and make the right decision about 475. There's a lot of nuances pointed out in that first blog that I showed you, like if you have a capital loss carryover, and you have a huge loss in Q1, you want 475, but then you want an entity for a do-over to get back to capital gains to use up your capital loss carryover. A lot of nuances, a lot of myths, misconceptions. We suggest you elect it on securities only, not futures. A lot of that is in this blog. Go and read that blog. Today it ran on Forbes too. I don't have the Forbes link here. A lot of my blogs are also on Benzinga and Forbes. And then also Active Trader Magazine has my column, the Business of Trader column. Big thing to tackle, this section 475. And then look at chapter 3, securities versus futures. So a lot of you are probably trading securities. That's your equities, your equity options, your narrow base indexes. Only a few of those made up of 9 or fewer. Options on narrow base indexes. Most of them are broad based, like the S&P 100. Your ETFs are securities. Your options on your ETFs are for the most part securities, bonds, mutual funds, small stock futures. Get your short-term capital gains and loss. If you hold it for a year, you can get the lower rate, the lower long-term rate, but how many active day traders are doing that? Many of you may have an investment portfolio. Make sure you segregate it in form and substance. Futures, those are your 1256 contracts. And that includes the U.S. regulated futures contracts, options on futures, foreign futures if they have the CFTC IRS approval, broad-based indexes, those are like the S&P 100, 500, the options on those broad-based indexes. Forward Forex, very few people have access to that, but only with the opt-out election. And we make a case for options on commodity ETFs. ETFs, you know, when you buy and sell them, they're securities. Now, if you have a commodities ETF, there's a tax return tip, and you get a K1, you held it through the end of a month, you get a K1, passing through maybe some passing through some 1256 treatment. Well, when you sell it, it's a security, but you got to add that pass-through income to your basis. The broker's not going to pick that up in cost basis reporting. You got to add it. Precious metals ETFs, it's like selling collectibles, like selling gold. So, you know, Forex is a whole other conversation. We have webinars on that. I don't know how many of you are trading Forex. It's ordinary gain or loss, but you can file a capital gains election on spot or forwards. Accounting, again, we discussed that already. Business expenses, we discussed. You can flip through these chapters later on. Let's go take a look now at something else I want to show you here. So let's look at some example tax returns. So I think you should come to our website, flip through the Trader Tax Center. That will give you a bunch of free information, see some blogs, but you need more information. See this ad here? Are you receiving every Trader Tax break? Green's 2014 Trader Tax Guide. You really need to go into visit our guide and check that out. So come over, it's a wonderful magazine style, an ebook, get both. It is the gold standard. And you'll see you can watch a video about it. You can check out the endorsements. There's an endorsement here from Lightspeed from Mike Sedek. I mean, he was kind enough to do that. And I mean, this is really what you need for sure. And once you get it, you just click on Access Files. By the way, what I recommend that you get is, you know, check out the table of contents, the bio, the cover, the video, the endorsements. Look at the packages. This platinum package is the bestseller. I'm going to give you a 10% off coupon right now. GTT value. And I'll put that into the chat window. Okay, so 10% off. 1 second. Coupon at shop.greentrader. All right, I'll just give you the coupon. GTT value. And let me send that to everybody. Well, I don't know if I can do that. I think I can only send text. So maybe Mike will put it up. It's GTT value for 10% off, or Sean will put it up. You get the book, the examples guides, and this is what I'm going to show you, some of these examples guides. I'm going to show you some of the things that we talked about, all these forms, all these tips, all these benefits. I'm going to show you some of those right now. Let's say you have that guide, You go into the securities guide. This is now, I've logged in. I've put in the username and password. I'm in the guide. This is a securities guide. There's also a futures forex guide. And there's the whole book itself on all the law and all the strategies, what you really need. So this first example shows like the new net investment tax, that new Obamacare 3.8% Medicare surtax on unearned income. It only affects the upper income traders. Started January 1st. So if your AGI is over 200 single or 250 married. So in this first example, this trader elected 475. He's a business trader in securities. He has a large trading gain on Form 4797. Large enough to trigger the AGI threshold for the net investment tax. When we do a transfer strategy to Schedule C, you got to read about that in our guides. That's the only way you unlock the home office deduction, by the way. Huge savings. And we show you how this trader can deduct his expenses for this net investment tax. So let's open up this example here, tax return. It's a single person here. It's some dividends. Let's look through this return. You got some taxable interest, money in the bank, some dividends. Some are qualifying because he has some investments. Sold some stock as an investment. He sold some Google. So he made $24,000. That's capital gain. But look at this 281. That's what he made in his trading business. This could be a Lightspeed trader who elected 475 as an individual and has Form 4797, made 309. He made over the 200, so he's going to, it's all unearned income. This is all unearned income, so he's going to trigger the new Obamacare Medicare surtax. And there was no AGI deductions, adjusted gross income, no deduction for a retirement plan, no deduction for health insurance on line 29. If this trader was an entity, he could have a huge deduction for a health insurance and a retirement plan and save so much more money, from $3,000 to $17,000 more if he was married. Could have saved a lot more money. Look, because he took all his business expenses on Schedule C, he took the standard deduction. He didn't have to worry about much else. Now notice, by the way, there is no Schedule C number here. It's blank. Why? There was a big loss from the expenses, but we did an income transfer to zero it out. So we got rid of the red flag. Only positive numbers on this tax return. We don't flip out the IRS computers. Notice this taxpayer has some AMT, alternative minimum tax, 284. Had this trader taken a miscellaneous itemized deduction for investment expenses, he wouldn't have gotten any of the benefits because he's in the AMT zone. Start making around 300, you're in that AMT zone. So look, he did great on all this other stuff, but he's got to pay $41.53 of Obamacare 3.8% Medicare surtax on unearned income. So let's look around this return a little bit more. This is very simple Schedule A. Notice that he doesn't get these deductions. This is the 2% limitation. He made 309. The limit is 61. He needs $6,000 of investment expenses or more to get over that before he gets anything. And then there's a phase out because he's in the piece limitation. Look how this trader got so disenfranchised from his itemized deductions. Those are for the birds. You don't want those. Get this interest and dividends. So this is that Schedule C, Trader in Securities, Mark-to-Market Accounting, Section 475. These are the expenses. 100% depreciation, 179 depreciation. He could get it because of the income transfer. Mortgage interest on business positions, not on investments. Supplies, travel, deductible meals, other expenses on page 2 of $10,000. We'll show you those next. Home office of $38.19. That was pretty low. So we did a transfer right here in other income. We transferred from the business trading gains only, since he had a lot more. We transferred enough so that this would be zero. We didn't want a profit because we don't want the IRS questioning self-employment tax, which a business trader does not owe unless they are trading futures as a member, full-fledged member of the futures exchange, only on that, not securities. So we did the transfer to unlock it all and show zero on that front page of the 1040. These were those other expenses: trader tax and accounting, chat rooms, newsletter publications, online information, seminars. If this trader didn't have trader tax status and was an investor, you can't deduct seminars and education. It's not allowed as an investment expense. So this trader sold some Google stock through Schwab, so it had a Schedule D, Form 8949-2. So you got it, first it goes to 8949, then it goes to Schedule D. So he sold some Google stock, but that's not where the business trading was. Business trading was on Form 4797, which I'm showing you now in Part 2. See Statement 3 attached, because it's a huge return. We would never show the whole thing. This is where the AMT happened. And remember, right here is where you have to add back the miscellaneous itemized deductions, which he didn't end up with any. So we had AMT. This is the new net investment tax under the Affordable Care Act. He made $309 of unearned income. That's all his income. He's over the 200 by 109, so he's going to pay on the 109. Now, out of this 309, if 250 was wages, then he would pay on the lower of the unearned income. In this case, he's paying on the lower of. It's really the same thing. So you'll look at those rules are in our guides and on the blog. This is now the expense for home office. So 175 square feet out of the 1525, 11%. Got the indirect expenses, insurance, rent, utilities. Then he picks up a share. If you own the home, there'd be depreciation down below too. Now, if you don't do the income transfer strategy, you're going to get stuck with a carryover, because the IRS, that's why it's no longer a red flag. They require income. Oops, keeps jumping on me. You'd have to do the carryover. This is where you see the 179 depreciation. Trading computer, trading software, you have to capitalize it. And because of the income transfer, he could get 100%. So these are the statements that go with the return. This is the transfer that we did to Schedule C. So Schwab, he made 132, TradeStation 175. Huge proceeds, 15 million, 11 million. Now, because he changed his accounting from, he filed this 475 election on April 15th, 2013, for 2013. That means he had to make a 481A adjustment on January 1st, 2013. Basically, whatever the unrealized gain or loss was on the business trading positions at the end of 2012, that became the 481A adjustment. And because it was positive over 25,000, he was able to prorate it over 4 years. So the adjustment should have been 39,000, but he could back out 29 because he's going to prorate it. So that saves him. That's some deferral benefits. And then we did the transfer to Schedule C. So look how we got that all the way down to 281, really lowered it. Then you got to put in these really big footnotes, really important. You got to have these in there. And you get those in our guides. We give you the footnotes, which explains a lot. So you can see there that was our individual trader. And he did pretty well. He did really well with the Schedule C, but he didn't get those AGI deductions, which could have saved him a lot more money. And we fixed the red flag a little bit, but we could make it look a lot better. Let's take that same kind of trader and get him into an S Corp. Well, when he has an S Corp, look at his individual return with an S Corp now. He's got a nice looking return. He's got, maybe his spouse has some wages, or he has some wages, interest, dividend. Just has this little net number from the trading business. No big negatives, no Schedule C. And he's got this AGI deduction for $12,000. That's the health insurance. Now, where's the retirement plan? The retirement plan is in the wages. The wages was $17,500 more than 128. This is the wage from the S corp. I'm sorry, he's single. This is the wage from the S corp. You only have to pay on the net taxable income. So the AGI, this is the health insurance, and then the rest of the premium for the rest of the retirement plan contribution, the profit sharing part, that's deducted on the S corp return. Look how nice and clean this individual tax return is. So let's look at the S corp return that goes with it. Okay, so that's the individual return. And now this is the S corp. So there's two returns when you have the entity. Your individual return, you're not going to awaken the IRS computers. Look at the beauty of this S corp return. The trading gains of Form 4797 come right to page 1. Boom. The wages, 146. Remember he reported the 128.5. The difference is that individual 401k elected deferral. The taxes, here's the 20% profit sharing plan to get up to the max. And then the rest of your expenses. And then there's a nice net income. So much cleaner, looks so much better. There's all sorts of examples on this examples guide. So you really want to get that in that platinum package. So we'll come back and look at the store. Let's go back to the website a bit here. All right, so you come into the site, how can we help you? Coming up to April 15th. Take a quick look in this cost basis reporting section. You're going to see what a mess it is with the cost basis reporting. You need the trade log. Cut to the chase. So come back to the home page, scroll down to products at the bottom, the guides, and the trade log. Click on trade log. The Green Trader Tax, we're the leading reseller of the program. We add a lot of tax knowledge to it. Works really well with the brokers and clearing firms that Lightspeed uses. This is the way to go. You can use it for all your accounts, for your entity. Comes with 12 months usage. You use it for 013 and 014 because you want to run it going into the year end to avoid wash sale problems. Again, if you have an entity, you can help avoid the wash sale problems with the IRA, which can happen all year long. So you want to get your trade log. And I think get your guides. You need the guides. You need the trade log. But a lot of you need more help. Consider a consultation with me. The initial consultation is $150 with me. I'll figure out if you have trader tax status, what you should do about mark-to-market accounting, if you need an entity or not, what kind. And then after that, you can upgrade and we can form your entity on our entity page here. Read about all the strategies, see how it works for you, and then for $350, oh, that's back to $395 now. Ask Mindy, she might still give you the $350. And then our outside attorney, $225. But we form everything for you. Then you pay the filing fees direct to the state, like a simple LLC. Let's talk a little bit more about entities. Quick link for entities. Explain to you all the reasons why the entity can help you. To avoid wash sales with your IRA. For late in the year to elect mark-to-market accounting. To give you more flexibility on mark-to-market accounting. To make your trader tax status look better. And to unlock those really beneficial health insurance deductions and retirement plan deductions and contributions. And you can trade your retirement account. So if you're single member, we recommend a single member LLC with S Corp election. If you're married, maybe a husband-wife general partnership or husband-wife LLC, 50-50. It's a little harder to do those deductions for health insurance and retirement plan with the partnership. So you might want that S Corp election, which makes it a lot easier. But read our guides on some of the nuances on that point. It's pretty simple to just set up an LLC or a partnership. Maybe we add a C Corp to the mix if you want a medical reimbursement plan deduction because maybe you got a lot of out-of-pocket medical. A lot of information about entities and the best types of entities. If you set it up out of state, you got to still register it in your home state. So don't think about, hey, I can just get a Nevada entity and not register in my home state. Forget about offshore entities. They're usually disregarded. There's no tax benefits, a lot of more red tape and IRS, I guess, looking over your shoulder and audit risk and making your life miserable. So get it right and probably avoid all the offshore stuff. But here's the cut to the chase: tax compliance, preparation, and planning. This is our core business. If you're a casual investor, non-trader, it might only be $300 retainer. Here's for the active traders. This is where you're signing up. That's what this page is. For you Lightspeed traders, you're active. You probably have the trader tax status. You lead the TradeLog. You got to get a good handle on what you made, your wash sales, your business expenses, your qualification. We'll handle all that. It might only cost like $1,200, and it's a business tax deduction. So you definitely want to consider that service. If you sign up now, we'll do it, an extension, and then we'll finish up in the summer. It's too late now to finish up everything. We require our clients to get us that information soon, earlier, so we have sufficient time. Okay, let's see. To contact us, just give us a call. Mindy's fantastic in customer support. We've been doing this a long time. We are the leading firm in the space. Stay clear of firms that are not CPA firms. They don't have a code of ethics, and they may try to sell you a lot of stuff you don't need. They may try to sell you 2 entities when you don't even need one. So don't get the wrong advice. It's just going to get you into a heap of trouble and be a waste of money. Let's see if there's any questions in the chat screen. I see Mike, Sean put in a few questions, so I'll expand that now, and we'll answer some of these questions. This is one question. At the appropriate time, question regarding wash sales. I'm not going to get into answering a wash sale question. It's very, very intricate, and brokers need to report it on the 1099-B. Basically, the rule is if you take a loss and you re-entered all or part of the position 30 days before or after, it's really a 60-day window, in any of your accounts on a married filing joint return or IRAs, you have a wash sale. You have to defer the loss to the basis of the next position. And you have to report each one of those wash sales on the Form 8949. And the problem is on these 1099-Bs is don't look at any totals. If the broker totals it up, that's a false number because, yeah, it's a total of everything, but you might kick the same wash sale down the road throughout the year. And you might have a wash sale number of $2 million and you didn't lose more than your account size, which may have only been $100,000. So it can get very confusing. All I can tell you is that TradeLog does it correctly. So have TradeLog do it. You reconcile to the 1099 the proceeds and purchase just in gross, not detail. We explain about all that in the Green's 2014 Trader Tax Guide. Let's look at the next question. Question: if I day trade a publicly traded partnership, the Ultra VIX ETF, gains show up in the 1099-B, and I also receive a K1 showing the total capital invested and removed, do I have to report the K1 showing 0? If you have a K1 that doesn't have any pass-through items, I mean, you could enter it to your tax software, but there's no number to report. There is no pass-through. But if there is a pass-through, make sure you add it to your basis so you don't get double taxed on that same income. It's sort of like a reinvested dividend. Now, that reminds me, TradeLog doesn't do corporate actions. If you have like a stock split or a reinvested dividend, you got to pick that up manually in TradeLog. TradeLog does a lot, but it doesn't do everything. Let's look at the next question. If I start trading mid-year, does the entity created mid-year work for trader tax status? Yes, but you got to open up a new entity account. Lightspeed may want to charge you the higher professional data feed fees because technically the vendors require that. But speak to Lightspeed about it. There may be a way to navigate around that. But that's up to Lightspeed and the vendors. So you're going to have a new entity account, and the entity is going to make the trades, and then that entity needs to qualify for the trader tax status going forward. All right, I don't see any other questions on the board. So I think we've covered all the content, and we went to about 45 minutes plus. So give Mindy a call in customer support. Use, when you go over to the store, the shop Green Trader Tax, again, you would go up, just come to our website, Green Company or Green Trader Tax, or access it on the Lightspeed, and then click into the guide store and use the GTT value to get the guides. And get TradeLog, you get that immediately. The guides you get immediately. And if you sign up for a consultation, Mindy will get you on the phone with me, usually within a day or two. So I have openings on my schedule because I'm not doing tax return preparation. Darren Neuschwander, my partner, heads that up. We have a tremendous roster of CPAs, highly experienced doing all that work. And by the way, we also can do your TradeLog accounting. That's another thing. Take a look at that under services. If you need some help with the TradeLog, we have CPAs who just do that. So they will actually do that work for you and save you a lot of heartache if you're having trouble with it. Maybe set you up so you can do it yourself going forward. So we hope to hear from you all soon, and thank you for coming today.
Thanks, Robert, for a great webinar. Everyone, just please remember to visit greencompany.com to visit Robert's blog, the education section, and the online store to use your 10% coupon. Also, if you have any questions, feel free to contact me directly at sales@lightspeed.com. Thank you.